Income Tax 2020, Practice Problem 1, Presentation 28. Diagnostic, tax software diagnostic for a state and local tax or SALT deduction limitation. Come in, relax with Income Tax 2020. Here we are in our Lacerte tax software. You don't need the Lacerte tax software to follow along. However, I do think they have a free 30-day trial. So if you can get access to a promo or demo version of it or any other tax software, it could be a good tool to practice with. We're going to be continuing on with our comprehensive practice problem number 1, this time taking a look at a diagnostic. In other words, a check from our system, from the tax software with relation to the SALT tax, which is going to be the state and local tax deduction generally on the Schedule A, which was complicated a bit by this tax return due to the fact that we have the home office deduction as well, and that complicates kind of the application of that limit. So let's just recap what we have thus far. So we've got the married taxpayer, Eric and Jane, married filing joint. We got the 2 dependents living in Beverly Hills 90210. In the first section, we talked about the total income items, adding items to income. Then we took a look at the above the line deductions or adjustments to income to get to the AGI. Then we talked about itemized deductions, and then we added a Schedule C. And then we took a look at the second page related to the credits primarily. Then we added a Schedule E. And now we're basically looking this over and looking at the diagnostics for it. Now, as we did this, we kind of double checked this by as much as possible, entering the same information into our Excel worksheet to kind of do a double check, because this is all an income statement. We don't have the double entry accounting system kind of supporting us or backing us up to make sure that we don't do a data input error. So if we put it into 2 separate systems, it can help us to see that. It can also help us to kind of understand things in a more easier to picture way than the actual tax return by being able to visualize the formula. However, there's some things that we may not, the software can kind of help us to pick up on as well. And the software is another internal control, another check, in that it'll provide us with some of those checks. It'll give us diagnostics oftentimes. So now we're going to go to the diagnostic. Now, if we have the Schedule A over here, you'll note that we had the deductions for the taxes. Now, this is typically going to be limited, or this will be limited at this point, to the 10,000 limitation, which we could see when we do the data input. Typically, we'll say, it's over 10,000. We'll say here, but it's not. It's not over 10,000. What's the problem? What's the problem? Well, the problem is that we deducted part of this on the Schedule C. So we deducted part of this on the Schedule C for the home office deduction. So it was included in this home office deduction, and that's part of like the home. So the IRS is basically saying, well, now you're kind of getting some of that property taxes, which is a state tax, which we're trying to cap at 10,000, and you're deducting it on this other schedule, and so that's going to cause a problem with that limitation with relation to generally apply to the itemized deduction. So the home office complicates this cap on the 10,000 related to the itemized deductions. So if we look at the tax return and we go on over to the Schedule A over here, and we're in the taxes paid on the Schedule A, then we could say, okay, it's under that 10,000. It's at the 9,345. But this property tax item here is one major component, and then the payments that we had, both in terms of state withholding, not the federal withholding, state withholding, and the amount that we put for the estimated payments are the amounts that are included here. So those are the 2 major items. But this 5525 was really, if we had the whole amount applied to the Schedule C, I think it was 6500. And then if I add that plus the 3820, it's $320 over the 10,000. So what happened here is we took that, instead of taking the whole 65 here, we took 5525 of it, and the rest of it went down here on the business use of the home office, which is here, right? So we had that 65 here, and then we got 15% of it. So we took that 65 total, and then we deducted 15% of it here, and that's the 975 amount that's included in this amount of the deduction here, minus the total of the 65, the difference then, that 5525, that's what's rolling over to the Schedule A, and they're basically saying, well, there's both on the home, and we're trying to cap the property taxes like on the Schedule A, which would primarily include property taxes on the home, to the 10,000. So that's going to be basically our problem. So we could do a worksheet and basically alter the way we would have the deduction on the business use of the home office. I'm kind of cheat right now. I'm going to reduce the actual withholdings we had so that we don't run into that problem. So I don't want to go back in and adjust the home office deduction. I'm actually just going to reduce the amount of the estimated tax payments, so we're under the threshold. Obviously, that's not something you would, in practice, if you're over the threshold, you'd have to go in and make the adjustment to the home office. But I just want to make this tweak to make it correct and basically wrap this problem up. So I'm gonna reduce the amount that we made for our estimated tax payments to take it under that 10,000, so we don't have an issue with it. So I'm going to go to my estimated tax payments. Now these are not property taxes. These are the estimated state taxes, which is included in the state, state and local taxes that can be deducted. And I'm just going to reduce this first one by 500 and say we didn't pay 1,000 for the state taxes. We only paid 500. Let's just say 500. And then I'm going to say okay. And so now if we add them together, it should be under the threshold and we won't have that problem. So I'm going to go back on over and I'm going to say then now we have the 3320. And if I added up to the total, meaning we had property taxes of 6.5 plus this now 3320. So now we're under the 10,000 cap and we shouldn't have any issues. So I just want to clarify that so when we finalize that, we don't have that kind of issue. Okay, so let's do the same thing on the Excel worksheet now, and then see if we could just tie this thing out, finally matching the Excel worksheet. So I'm going to go into the state payments. I'm going to go into the payments that we made for California, and I'm going to say this first one was only 500. And so that's going to change. This pulls over to my Schedule A now. So if I go over to the Schedule A, we're saying the taxes that were paid are now here. So this is being pulled over. And that you would think would tie in to what we have on our Schedule A here. So taxes are now at the 8845. So if I see that, we're now at the total taxes of the 8845, and then we have the total itemized deductions bottom line of the 25,675. So 25,675. Okay, now let's just review and see if anything else changed with that change. So we're going to go back up and see if anything else was tied in that's going to cause us a problem. So we got the income, 131,736. So that's going to be tied in here. And that's total income, 131,736. We have then the 13,464 for the above the line deductions, 13,464. We then have the 25,675 for the itemized deductions. That's where the change happened. 25,675 for the itemized deductions. And then we have now the 10,166 for the qualified business. So that's going to be the 10,166. So we got the 82,431 for the taxable income. So we've got the 82,431. And then we're going to let the system calculate the tax, which should change to some degree a bit. So 9623. So 9623 is the tax. We're going to change that. 9623, relying on the software for that. Then we got the credits, 4680 on the credits. So that's going to be this item. Looks good. And the next one we have is, hold on a second. Next one, the credits. Then we've got the other taxes, 7728, self-employment tax. That shouldn't change. That's good. And then we have the total taxes, 12,671. So that's the 12,671. Then we have the payments down here, which are including the withholdings, and then the estimated payments that we made, as well as the refundable tax credits, adding up to the 19. So here is the 19 down here. Once again, withholdings on the W-2, 8,000, 1,000 refundable tax credit, 10,000 from the estimated tax payments. And then the difference between that, the tax here of the 19,000, that's the withholding or all the payments, minus the 12,671 is going to be, once again, that 6,329. So those are 6,329, and that should tie out over here for the 6,329.